You check your bank account and every balance reads zero. No warning, no access, just total financial blackout. That moment, the question is no longer, can I afford this? It's, will I survive this? Tensions are inflating worldwide. In the Middle East, Israel's surprise strikes stormed Iranian nuclear and military sites on June 13th, killing near 1,000 and escalating regional volatility. Iran is now threatening accountability for both Israel and the U.S. With the Strait of Hormuz closure legislation pending in Tehran, this could choke a quarter of global oil supply overnight. Meanwhile, U.S.-Iran diplomatic channels reopened in Oman, but the window remains fragile. Russia, far from stepping down, rejected ceasefires and launched its most intense spring offensive yet, pressing into eastern Ukraine. This is not a local crisis, it's a global pressure cooker, and any flashpoint could cascade into an economic earthquake. Welcome to Safety Zone. Tonight we're skipping bunker talk to focus on what too few prep videos cover: your money. In a World War III scale event, your access to cash, banks, and markets isn't just paused, it might vanish for months. This isn't doom scrolling. It's taking a hard look at the worst case so you're ready to act with calm and clarity. We'll walk you through exactly what to prioritize, step by step, to protect real value, whether currencies collapse, banks freeze assets, or economies fracture. Begin with liquidity before crisis hits, because when systems freeze, digital wealth turns useless faster than most people imagine. You want to be the person who can still operate while others are scrambling. Start by pulling together enough physical cash to cover at least 30 days of absolute necessities: rent, food, fuel, meds. That's not just a round number. It buys you the time needed to adapt while others panic. Don't just stash big bills, break it down into small denominations: 20s, 10s, 5s, and especially quarters. Yes, quarters. When card readers go dark and even small transactions have to happen face-to-face, exact change becomes leverage. Coin-operated washers, vending machines, toll booths, even small-time bartering, they all become real again. Divide that cash wisely. A portion goes in a secured, fire-resistant safe at home, bolted down, out of sight. A second slice lives on your person in a travel wallet or EDC pouch, something you can grab instantly. The third piece? That's your fallback, an off-site cash. Think of it like a spare tire for your financial survival. Place it somewhere discreet but accessible, like a trusted friend's home, or a concealed spot at your bug-out location. This isn't doomsday money, it's shockwave money. What keeps you mobile, fed, and thinking clearly while others spiral? Then move to your next layer: real physical value. Precious metals, especially silver, still speak a universal language even when the dollar loses its voice. Focus on silver rounds or bars, not collectible coins. In a crisis, no one cares about mint year or rarity. They want weight and purity they can verify fast. Avoid numismatics. They're overpriced under pressure and hard to move. Use 1-ounce silver rounds marked 999 fine. They're trusted and easy to trade. You're not trying to get rich, you're trying to stay viable. And silver does something cash can't. It keeps its worth across borders, across systems, across breakdowns. Next, break your reliance on digital convenience before it becomes a trap. Our lives are tethered to apps and accounts, but in a grid-down, war-footing world, banks may shutter overnight, online platforms could be throttled, and identity-linked systems might be frozen, surveilled, or compromised. That's why the next layer of your financial resilience is to disequilibrate, to intentionally pull your balance away from centralized, fragile digital systems. Start by setting up at least 2 alternative peer-to-peer payment options. Focus on platforms that let you transact directly, with minimal identity verification. Look into localized credit apps, community-based currencies, or crypto micro-wallets that support fast, small-value exchanges without requiring a third-party gatekeeper. Preload these with fixed manageable amounts and store offline copies of access credentials and QR codes printed, laminated, and kept in your analog prep kit. Because if the banking system hiccups but cell towers remain partially functional, these peer-to-peer tools might be your only bridge to food, fuel, or a safe ride out. Pair those tools with a physical ledger, yes, paper and pen. Create a minimalist bookkeeping system where you log every in-person transaction manually, noting date, time, value exchanged, and who was involved. This isn't old school, it's future-proof. When server records vanish or trust becomes scarce, being able to show a clear paper trail gives you leverage, reputation, and peace of mind. And if you're ready to level up, consider a radio-resilient hardware wallet, one designed to sync over low-bandwidth shortwave or mesh networks. These are emerging tools that allow limited crypto transactions via ham radio or decentralized satellites, completely bypassing traditional infrastructure. They're not toys. They require serious understanding of protocols, encryption, and legality, but they're one of the only lifelines that could still work in a blackout economy. Think of this as your cold storage vault for digital value, locked, portable, and shielded from both collapse and control. Diversifying your financial footprint isn't just smart, it's strategic insulation against cascading institutional failure. Think of each bank or credit union as a potential point of failure, not just a service provider. When systems are stressed, whether by cyber attacks, economic sanctions, regional blackouts, or sudden bank holidays, you don't want your entire livelihood trapped behind one login screen. By maintaining accounts at a national chain, a regional bank, and a local credit union, you create 3 separate lanes for access, each with their own vulnerabilities and strengths. The big banks have scale and reach, but also the highest risk of becoming prime targets. Smaller credit unions might be less likely to face coordinated attacks, but more prone to disruption if their core infrastructure relies on shared back-end processors. Balance your deposits smartly. Keep each account well below the $250,000 FDIC insurance cap, not because you expect to have millions, but because staying under the limit ensures faster payout in a crisis. And don't just think in terms of savings. Check which account allows the fastest wire transfers, which offers mobile check deposit offline caching, and which one lets you walk into a branch and pull cash with minimal friction. That's your real-world fallback. Now add a physical layer of redundancy, safety deposit boxes at 2 of these institutions. Not for jewelry, this is about irreplaceables. Store certified hard copies of IDs, backup bank account details, property deeds, insurance policies, and a brief personal inventory sheet. If the digital grid collapses, you'll still have legal footing and ID verification to reclaim assets, cross borders, or prove ownership. Then turn to credit. Maintain one everyday credit card with solid rewards, low interest, and no annual fee, but don't let it carry balances. A second card should be your ghost asset. 0 use, no connections to subscriptions or autopay, just quietly waiting in case your main gets frozen or flagged. Why? Because in wartime or emergency economies, credit systems are often among the first to get locked down under fraud prevention measures. A clean backup card gives you leverage for travel, rental gear, emergency fuel, or equipment loans when cash alone won't do. And here's the key. Test your backup every 6 months with a small charge, then pay it off instantly. That keeps it active without drawing attention. Credit is less about buying power in a collapse and more about access. You don't need luxury, you need optionality. Next, stabilize income pathways. If you work remotely or depend on cloud-based operations, understand that you're tethered to infrastructure that may not survive a protracted crisis. Your employer could lose access to payroll processing, banking systems, or even internal communication tools. That's why now, while everything still functions, you need to negotiate a contingency. Approach your employer with a pragmatic backup plan. Propose that a portion of your income, ideally 30% or more, can be converted ahead of time into something that holds barterable or local utility value. This could be preloaded grocery store credit, gift cards, transferable service vouchers, or even partial compensation through things like professional tools, food provisions, or fuel allotments. You're not asking for doom prep, you're proposing continuity. And if you're in a position to influence HR or management, advocate for company-level resilience programs that support staff with mutual aid networks and parallel payment options. That becomes a differentiator when others are scrambling. Even more effective is forming informal skill trade networks with coworkers or local contacts. Think of it as a neighborhood guild system for the digital age. Electricians swap labor with teachers, mechanics help IT techs, gardeners support delivery drivers. When money stalls, real value flows sideways, not top-down. Relationships you build today become currency tomorrow. If your income is tied to e-commerce, gig apps, or online freelancing, your exposure is even higher. Diversify, not just where you sell, but how your products move and how your buyers pay. Choose at least one platform that lets you arrange direct pickup, cash exchange, or hand delivery in your region. Think Craigslist-style systems, community Facebook groups, or even your own SMS-based waitlist. Keep an offline backup of your customer base, ideally with first names, contact methods, and past orders. If digital systems crash, you can manually reach out and continue business under the radar. For your top-selling items, build a small physical inventory now and pre-assemble flat pack versions for quick access. Bundle your most in-demand offerings with printed info sheets, basic pricing tiers, and instructions for use. So even if you lose your website or phone, a customer with cash in hand can still walk away with something useful. This isn't regression, it's resilience. In a breakdown economy, your ability to generate, trade, and deliver real value without relying on third-party tech is the ultimate form of financial independence. Debt, when leveraged correctly, can be a tool, but in times of disruption, it quickly mutates into a trap. When the economy seizes up and digital systems go dark, your obligations don't disappear. They just become harder to manage. Interest keeps ticking, notices get lost in the noise, and without clear access to your accounts, you lose visibility and leverage. That's why now, while systems still hum, is the time to act deliberately. Begin by targeting high-interest debt with surgical precision. Credit cards, payday loans, or deferred payment schemes are financial time bombs. Every dollar paid down now buys you flexibility later. If possible, consolidate scattered balances into a single lower-interest loan or line of credit that gives you clarity and breathing room. For secured debts like your mortgage or car loan, don't wait for crisis to find out what your lender's emergency protocols are. Call them now and ask directly. What happens if systems go offline? Can I initiate a forbearance request offline? What paperwork do I need in advance? If they offer a hardship clause, download it, print it, and store 2 signed copies, one for you, one to mail if electronic submission fails. That single document could prevent foreclosure or repossession during systemic confusion. Update your mailing address with every creditor and lender, even the ones you think you'll never need to contact again. Digital statements are fragile. Hard copy communications, especially certified mail, are often the last thread of trust in a fractured system. And keep a record, not just of payments made, but of account numbers, loan details, payment schedules, and customer service contact lines. Write them down, print them, and seal them in a waterproof sleeve inside your emergency binder. One final rule. In the 3 to 6 months leading into a potential conflict or collapse scenario, stop all non-essential use of credit, no new gadgets, no luxury upgrades, no "it was on sale" purchases. Every debt you avoid today is one less liability tomorrow. The banks might forgive missed payments during a widespread blackout, but that's not something to rely on. Because once order begins to return, creditors will reappear fast, and you'll be in a much stronger position if you've kept your balance sheet clean, your documentation airtight, and your footprint small. Insurance is more than paperwork, it's your credibility. In a post-collapse environment, where systems are down and institutions slow to respond, your ability to prove coverage could mean the difference between a temporary setback and irreversible loss. That's why it's critical to act now while everything still works. Start by confirming you have both digital and hard copies of all major policies: homeowners or renters, auto, medical, and life insurance. Don't rely on app-based access alone. If your phone dies or the server hosting your provider's portal goes offline, you're invisible to the system. Print the essential policy documents, not just the cover page. Include declarations, contact numbers, payment history, and proof of last premium paid. Highlight the key terms: deductibles, exclusions, emergency numbers, and coverage windows. Then laminate them. Moisture, heat, and constant handling degrade paper fast in field conditions. Store one copy in your home binder, one in your get-home bag, and a third off-site with a trusted contact or inside a fireproof safe. In disaster zones, small towns and counties often organize mobile insurance clinics or pop-up adjuster centers, especially after storms or fires. These operate offline and rely entirely on physical paperwork. If you can't show proof, you don't exist in their system. No payout, no coverage, no help. Beyond formal insurance, think about the informal arrangements that matter just as much when systems fail. Maybe you've agreed to trade labor with a neighbor, split fuel costs, or lend gear if things go sideways. Great, but in a grid-down scenario, verbal agreements dissolve in tension. A signed, printed, witnessed agreement, even just one page, carries more weight than any memory of what was promised. Create a small binder for these shared risk packs. Label it clearly. Include signatures, dates, contact info, and terms of use. Was that chainsaw loaned or traded? Is the spare generator a gift, or does it get returned after 10 days? If you've pre-arranged childcare swaps, medical support with a nurse neighbor, or even a shared meal rotation, document it. These aren't just legal shields, they're stability tools. And when confusion spreads faster than information, being the one person who can produce calm, clear, printed proof gives you authority, not just access. Markets recover. Governments reboot. But resilience isn't about surviving blackout. It's about emerging intact and adaptable. Once financial systems return, be cautious. Instead of redepositing everything at once, gradual restoration builds flexibility back into your portfolio. Use the crisis as a reset. Invest in community credit unions, small business promotion, local energy cooperatives. That doesn't just diversify your finances, it strengthens the economic ecosystem for your family. In the aftermath of geopolitical breakdown, the strongest economies are local, not global. And your money should follow that shift. If this guide helped you feel less at the mercy of global events and more in control of your money, hit like, subscribe to Safety Zone, and ring the bell. Every week we turn alarm into actionable readiness, so you're always steps ahead. Until next time, keep your mind sharp, your reserves balanced, and your family prepared for whatever world throws next.